Welcome to the Uncle Starts FIRE channel, where I share my FIRE, or financial independence retire early journey as a 45-year-old. The channel is for everyone who is interested in investments, especially in dividend shares and REITs. In previous videos, I present charts, tables and financial information throughout the video. My friends feedback to me that when they were watching a number of times, the information stayed on the video for too quickly, and often, I will continue to talk about the numbers after they were gone. This led them to pause the video just to study the information better. So in today's video, I will be showing the charts, tables and financial information for longer. Hopefully this helps. Okay, let's get into today's video. With the end of the first quarter of 2023, I wanted to go through the top 5 dividend stocks and REITs with the highest performance. If you have them in your portfolio, good for you. If not, it will be worthwhile to think about whether their outperformance will continue, and whether the underlying business continues to be attractive in the long term, and to add to your portfolio if so. But in any case, this uncle very long-winded, but must still remind you that the key to FIRE is to invest in a well-diversified portfolio through dollar cost averaging over the long term. Remember, even Warren Buffett agrees that most fund managers cannot beat the market, and certainly no one knows whether an outperforming share can continue to outperform in the next month, or even the next 1 year. But by understanding and analyzing the underlying business modes, you can identify winners over the long term. At number 5, is one of my favorite REIT at the moment. It is Frasers Centrepoint Trust or FCT, with the share price up about 9%, year to date in the first quarter of 2023. The underlying properties in the REIT consist of all suburban malls. This includes Causeway Point, North Point, Tampines 1, and Changi City Point. They are all located within populous residential areas, and are near to the MRT stations. With the captive catchment population, their business is very resilient. Even during the downturn years, people continue to visit the suburban malls near their houses. According to the management, they serve 2.6 million people with their malls. Their business has also recovered very well, after COVID restrictions have all been removed. The occupancy, tenant sales, shopper traffic sales are all up, and the rental reversion from renewed leases are positive. Based on CBRE research, suburban rents has gone up more than Orchard Road rents. The REIT also announced that the tenant sales are 12% above pre-COVID levels, and this was achieved when the shopper traffic has gone up to around 80% of pre-COVID levels, showing shoppers are making more purposeful visitations to the malls. Management explained that flexible working arrangements affected the number of shoppers in the morning, when people grab some breakfast or coffee, before heading to the office. Number 4. At number 4, is Singapore Technologies Engineering Limited, or ST Engineering. The share price is up about 10% so far in 2023. Its revenue grew 17% in 2022, with EBIT up 9%. However, its net profit was down 5%, due to government's COVID support being reduced. This uncle likes ST Engineering as a large part of its business is in the resilient defense sector, meaning that the Singapore government is like the sponsor of this business. You can imagine spending on defense will not dropping even during recessions. In addition, it is in the well-recovering sector of commercial aerospace business. You know, as tourism restarts after COVID relaxation, airplanes need to be remodeled and maintained. Its commercial aerospace business went up by 21% in revenue, amid the recovering air travel, which is now 77% of pre-COVID levels. This means that the recovery still have legs. and we can look forward to better times ahead. At number 3 is another Frasers REIT. This time it is Frasers Logistics and Commercial Trust, or FCLT, with the share price increasing by 12% so far in 2023. It has 105 properties, with geographical exposures across Australia accounting for about 50%, followed by Germany at 24%, and Singapore and UK at about 10%. Across so many properties, their occupancy is still very high at 95.9%, and a weighted average lease expiry of 4.6 years. Most of its properties are in the more resilient logistics or business parks sectors, with 97 properties, and 100% occupancy across all of them. This is what I really like about FCLT. They have fixed or CPI-linked rental escalations in their logistics and industrial properties, which account for about 70% of the asset value. CPI refers to the Consumer Price Index, and CPI-linked rental escalations means that the rents will increase based on what the Consumer Price Index grows by. At number 2 is Keppel DC REIT. The share price went up by 17.5% in Q1, 2023. Keppel DC REIT had some rough times last year, due firstly to weaknesses in technology and tech-related shares, and secondly to higher electricity prices, as electricity expenses were mostly to be paid by the REIT. Recall that data centers need to keep all their servers on all of the time, consuming large amount of electricity. As a result, its share price dropped from $2.36 to $1.77 in 2022, a massive 25% drop. There was a loss of confidence in the REIT, but it managed to reverse some of the losses so far this year. Its income and distribution continued to grow last year, and it has a high portfolio occupancy of 98.5%, and a weighted average lease expiry of 8.4 years, which is very long indeed. Taking a closer look at the portfolio, management announced that more than half of the portfolio has built-in income and rental escalations based on the CPI, or fixed mechanisms embedded. How sweet. In addition, relating to worries last year about electricity expenses, the REIT has secured fixed electricity tariffs for Singapore colocation assets for 2 years, and Australian ones for 1 year, and more than 90% of electricity costs are passed through to colocation clients. Finally, the top performing dividend share so far this year is Sembcorp Industries Limited, which went up by almost 30%. Wow, right. Sembcorp Industries had a fantastic few years since disposing of Sem Marine, and shifting towards green energy, but their work is not done yet, as at end of 2022, sustainable solutions account for 27% of their net profit. By 2025, they are targeting 70%. I think that is an ambitious target on any account, but management seemed confident. Their turnover increased by 21% last year, and their net profit went up by 204%. Very impressive indeed. This is probably why the share price has performed so well. With clean energy the focus nowadays, their brightest days may be ahead of them. That's a wrap. This has been my video on the top dividend stocks and REITs in terms of performance so far this year. I hope you like this video. Please leave me a comment or like. Also remember to subscribe to this channel, so that you will not miss future videos on investments in our F.I.R.E journey. See you next time.